Nassau Street Partners is a relatively new investment bank here on Wall Street. With me is Juan Moreno, a managing partner at the bank. And just lay the groundwork. What is Nassau Street Partners doing?
Well, Nassau Street Partners is a relatively new boutique investment bank. We focus primarily on capital raising and mergers and acquisitions for our clients. We're one of the fastest growing firms here on Wall Street. We're just over 50 employees now. And I think that, what we've done is we've brought very experienced senior leaders in the investment banking, family office, and venture space. We've brought them on to lead our investment bank. And we combine that with a lot of new technology, a lot of new energy, and ultimately it's a new approach to raising capital, to mergers and acquisitions that's proven successful so far.
And you're focusing on a particular sector, or a particular type of company. Explain that.
The clients that we work with are innovative. We want to work with founders that are disruptive on the capital raise front. Ultimately, what matters to us is that we can present a growth story that is attractive, that is compelling, because it is our duty not only to represent our clients, but it's also to represent the investors and make sure that the clients and the deals we're putting in front of them are quality and that fit their mandate. So I think that above everything, we're looking for founders that have a compelling story, that have a compelling growth story, and that frankly are able to thrive in the current market environment.
What kind of growth are you seeing in private markets?
I think there's huge amounts of growth. More and more companies are delaying going public. For a lot of companies, it doesn't even make sense anymore to go public. I mean, we're here on the stock exchange. More and more companies are deciding it's not worth it. And I think that as valuations in the private markets grow and grow and grow, it's becoming more of a playing field. And I think in the private markets as well, you're seeing a shift where there's new entrants to the space. You've got family offices coming in where traditionally they might have been LPs of a large venture fund. They're coming in and they're leading rounds, or they're leading syndications that they're putting together. So there's a very big shift, and frankly, there's a very big amount of appetite for U.S. growth equity, U.S. startup capital right now, specifically from overseas investors, Europe, Asia. They're seeing the growth story in the U.S., they're seeing the metrics, and they want to get involved.
And what kind of trends are you seeing right now?
Well, obviously there's the one everybody knows about. There's AI, there's tech. But I think when I look at valuations, when I look at market dynamics from post-COVID, valuations have, on the whole, barring a few exceptions, come down. And they've come down to more reasonable levels where a lot of investors that had that dry powder during 21, 22, 23 are now choosing to deploy if the story makes sense, if there's real tangible cash flow, or at least a determined path to cash flow, to strong revenue with good metrics. They're now coming in to deploy at this time because those valuations have come down to far more reasonable levels.
Yeah. And what investor types do you see having the dry powder to get involved in these kinds of deals right now?
Without a doubt, I think it's family offices and large strategics. As I had mentioned before, they had been on the sidelines for a while, and I think their appetite now, as the economy is picking back up, as the U.S. market is strong, they're looking to come and deploy, particularly into U.S. issuers, and take positions in very promising companies.
Yeah. Now, valuations have come down, at least in some areas,
Yeah.
Since 2021. Where do you see that headed?
I think that they're at a reasonable level now. I think it's probably headed upwards for most segments. And I think investors recognize that. So I think that now is a time where we're getting a lot of interest in certain segments. And right now is the time, I think, that if you have a good narrative and if you're approaching the right investors and you have at least a path towards revenue and later profitability, you have a very, very good chance right now because of the valuations levels.
Yeah. And what are some mistakes that you see founders make when they're trying to raise capital, maybe have an IPO?
Well, look, I mean, I think that, you can run a successful company or you can raise capital, but if you're going to try to do both, it's very, very tough. And I think that a lot of founders will try to do both, and it's overwhelming. And so I think that just when it matters most, just when the financials, just when your growth metrics are under scrutiny, when you're raising around is when you as the founder, you want to be all in on the company. You don't want to have your attention split 10 different ways because you're having to raise the capital. So that's what we see a lot. And frankly, I think that's where the big market opportunity has been for us, is coming in and supporting founders and partnering with them, and helping to take that burden off their shoulders and letting them do what they do best, which is running their business, and letting us do what we do best, which is raising the capital.
Yeah. And what about family offices and the interest that they've taken in the private markets? Why do you think they have done that so much lately?
Look, I think it's a trend that's going to continue. Family offices have transitioned massively in the last 10, 15 years. Even in the last 5 years post-COVID, they've gone from being passive LPs to active GPs, leading rounds and being very, very notable investors. That's only going to continue. And we find family offices to be an excellent fit for our clients because they think long-term, they think in terms of decades, and frankly, they're looking for more synergies than just introductions to portfolio companies. They're looking for strategic introductions to industry leaders, government officials. They can pull those kind of levers, and ultimately they can accelerate the timeline of our client's company way faster than maybe traditional venture might.
Okay, Juan, thank you so much.
Thank you, Jane.
Okay. With me is Gary Shields, Chairman and Managing Partner. Gary, welcome. And I mean, just give us a little bit of a groundwork. And you've been in the industry for a while.
History about 40 years.
40 years. Okay, so give me a history of your bio.
I came out of Georgetown University and actually found my way to the big Paris-based powerhouse Credit Lyonnais early in my career. That gave me kind of a grounding in terms of international finance, some accounting, regulations, that type of thing. Moved to Wall Street, where I joined LF Rothschild, and became a senior research analyst there in technology. That gave me a really good grounding in the technology space, which has really followed me, and it's very consistent with what we do at Nassau Street Partners.
Yeah.
I moved to the investment banking side and actually then moved to Robertson Stephens, another well-known firm at the time. Started out at Robertson Stephens as a analyst, and then moved to the investment banking side. They're focused on both technology as well as environmental services. Got accustomed to taking companies public, doing secondaries, doing large financings, working with companies to hone their story, put it together so the public markets would understand it. From there, I went to the Chicago Corporation, where I headed the healthcare and technology investment banking groups. Left investment banking temporarily to join an operating company. Kind of got the urge to find out what was going on with the CEOs and CFOs that I was meeting with. And so I joined a company named Integrated Medical Systems, where I was number 2. And in the midst of doing our public offering, got a call from Eli Lilly, and I negotiated a nice return for our shareholders and a sale to Eli Lilly.
Yeah.
I then formed a boutique investment bank in San Diego, which is the earlier company had taken me to San Diego. I formed an investment bank there, met up with a guy named Ted Wade, who founded Gateway Computers.
Yeah.
I then founded one of San Diego's largest venture capital firms. Ted and I partnered up. We invested in more than 50 companies together. I've sat on more than 20 corporate boards of directors. And it gave me a real grounding in terms of helping companies go from, two people in a garage to building a real growth company. Was able to work with some really successful companies. And it once again, very consistent with what Nassau Street Partners does today.
So what drew you into Nassau Street? I mean, was it the growth or like the kind of specific focus that they have?
I get that question a lot from prospects, and what I guess I would say 3 things. I would say the speed at which Nassau Street Partners can act, the reach that the firm has, and the people. Maybe most importantly, the people. We all work as a team. Actually, last night we were talking to some folks at dinner, and we were talking about how it doesn't matter. We're kind of a virtual firm. I mean, we have people all over the world, and but it doesn't matter whether Juan and I are on a virtual call together or whether we're shoulder to shoulder. We know what we're thinking. We work together very well. The firm acts. I mean, the days I call it investment banking inertia. The days of slogging it out for 9 months, 12 months, trying to get a company funded or sold. Changing the story over and over. Those days are gone. We try to get our companies out to market within a matter of a couple of weeks. It
Wow.
takes us a month. That's a long time for us. We also have the reach to thousands of family offices and ultra high net worth individuals. So those are things that I really found to be important to me. The speed, the reach, and the people, I think, are really what attracted me
Well, I was going to ask about how things have changed over the years in your career. And
a lot.
I think also the pool of capital, we're seeing Middle East raising money, there's Asian money. I mean, has that also changed how the whole
Yeah.
capital raise is done?
Yeah, I actually, coincidentally, I mentioned to you earlier, I actually rang the bell, closing bell here 12 years ago, and things were a lot different even then. But yeah, the pools of capital, it's easy to reach global investors these days. So we can go to family offices in Europe, the Middle East, Asia, and approach those very quickly. And we've made very good relationships, warm relationships with about 10,000 family offices around the world.
Wow.
So we have the ability to reach out to those, and it's really transparent. In fact, it's not unusual for me to get on a call with one of our biz dev people, and the first question that's asked is, "Where are you?" And people are all over the world.
Yeah.
So yeah, things have changed a lot.
Yeah. Now, what are important elements that a company needs to have if they're looking for a strategic buyer or a capital raise?
Yeah, I think the most important thing, the first thing, is what's your narrative, what's your story. You've got to have a hook. Got to get me excited. When I was an analyst on Wall Street, I'd get calls from the brokerages, and I would tell them, you have 30 seconds to convince me that I should ask about more information. And we do that. That's important to look at. So you need to have the story, number one, the hook, if you will. You need to have all of your act together. We call it a data room, actually, if you want to sort of formalize it. So your financials, clean financials, great, good cap table that's in good shape. Any kind of major contracts that you have, because investors will tear you apart in 2 minutes if you give them an opportunity. So you want to have that. And then third, I would say you want to have the right kind of people surrounding you, like Nassau Street Partners, who are pros, who know how to go to the investors, who know how to tell your story, and who understand what you're trying to do. So
Yeah. And what's moving the valuations on the sell side right now?
you can have companies, for example, in the biotech space or other sectors, where they're not generating any revenue, but they might get a very high valuation. And so we rely on data. There are a lot of very good databases to give us information in terms of sector valuations and that kind of thing. But we used to say, when I was at Robertson Stevens, that investors are going to pigeonhole you. In fact, one thing I tell companies is, don't tell me you're doing something that nobody's ever done, because investors don't want to hear that. They want to identify you with something. But our goal is, you're going to fit into a pigeonhole, but we need to put you in the pigeonhole up the valuation curve. So to make your story interesting and dynamic.
Yeah.
So,
Gary, fascinating to hear that. Thank you so much.
thank you.
So-